The Japanese yen and the British pound showed the best performance last week, sharing the first place and having strengthened against the dollar by 1.7%. The Canadian dollar gained 0.9%. The value of the Australian dollar remained practically unchanged, while the euro and the Swiss franc lost 0.3% and 1.1% respectively. The dollar index fell slightly by 0.3%. As for macro statistics, the previous week was remarkable by little encouraging data on manufacturing activity of the Eurozone, especially Germany. The regional PMI indices are still below 50 and therefore reflect decreasing activity, and the indicators of the Eurozone's largest economy fell sharply, reminding market participants about possible ECB rate cut. But the real surprise for investors was UK GDP data, which turned out better than expected. In the first quarter, the economy grew by 0.3% after a 0.3% drop in the previous quarter. Statistics from the US also surprised, but negatively, as indicators fell short of forecasts. Orders for durable goods fell in March, and GDP grew by only 2.5% in annual terms in the first quarter, instead of the expected 3%. Indicators of market sentiment, calculated on the basis of Commodity Futures Trading Commission data, show that futures market participants still keep net short speculative positions on the Japanese yen, the Canadian dollar, the British pound, and the euro. Net long position on the Australian dollar, which is the highest among the 6 major currencies, continued to decline. Last week, it was the Australian dollar that became the leader in net position drop pace. Market participants have become less optimistic about the prospects for the Aussie. Bearish sentiment on the European currency rose for the first time during several weeks. Net short position on the Japanese yen remains the largest and relatively stable. In addition to employment and inflation reports from the Eurozone, GDP from Canada, PMI from China, this week we are waiting for 3 extremely important events in terms of their potential impact on currencies. On Wednesday, the Fed meeting. On Thursday, the word will go to the ECB, and the week will be concluded by the release of April's non-farm payrolls. We do not expect any changes from the Fed. Despite US statistics is improving as a whole, it is not stable yet. Recall at least the March employment data, turning out to be worse than the most modest forecasts. But the ECB could go for a policy easing. Forecasts are in favor of reducing the main refinancing rate to 0.5%. From a technical point of view, the Australian dollar seems to feel comfortable within the range of 1.02 to 1.06 versus the greenback. Last week, the pair formed a reversal pattern, and if it is confirmed, the pair may drive to 1.0450. The European currency is still in the area of 1.30 to 1.31 and is in no hurry to go lower, despite the formation of a reversal pattern in the first half of April. Much will now depend on the ECB. As rate cut may be already priced in, unchanged policy can provide additional support to the euro. The British pound really surprised. The currency pair broke resistance at 1.54 and confidently goes to 1.56, where 100-day moving average and 50% Fibonacci level are settled. This week, no important news is expected for the pound, except PMIs. We are waiting for the Bank of England meeting on May the 9th. The dollar yen was not able to pass the 500 mark even at the second attempt and retreated below 98.00. Further downward movement, namely a drop below support at 96.60, may put under doubt the short-term growth prospects, as a reversal pattern will be formed and chances of a drop to April lows near 93.00 will increase. Up to this point, we prefer short-term long positions. It was weekly market overview by IFC Markets. Subscribe to our YouTube channel and follow us every Tuesday. Bye!